Right here on the screen right here is a very interesting chart. And by the way, this is another real estate video here from the Tokyo Real Estate Man. And this is an interesting, I don't know, over the years I've been buying apartments over the years, and then somehow I ended up on someone's, this company's mailing list. What are they called here? They're called LandNet. And then somehow I ended up getting their mail over the years, and they send out like a real estate report out every couple of months. And I like to, every time I get their mail, I like to look at it because I like to look at the chart and like often I like to look at the chart, because I forget like where the price action of real estate has been going in my lifetime, just because I forget. But then every time I come to look at these, it's just I really like it. Anyhow, in this chart, and I'm trying to do here, there's no pointer with this software I got here, but this is a chart of the Shutoken Chuko Mansion, okay, Seiyaku, okay, which is basically the Tokyo Metropolitan area, okay, used apartments, okay, that have been contracted sales price, okay, versus the Nikei Heikin Kabuku, okay, so versus basically the Nikkei. And the chart here, if you see here, it goes from 1994 on the very left here of the chart, and the Nikkei, okay, is indicated in with the red line, and the used apartment of the Tokyo metropolitan area is indicated in the black line. And we know that the Nikkei, I think, topped 1989 on the last day of 1989, right? So that is not showing here, and that top was at 39,000. And then you can see that we had a long, and I came here in the 1990s, and then we had many, many years of deflation from basically 1989 to here we see the bottoming stages to about 2000. I would say it's a range. It's never one day. It's never one day you see this bottom, but there was a range between even like 1998 and 2005. They were here in this little bottom area right here in the chart right here. And then let's look at here some of the details that are pointed out here on the chart in terms of the timeline. And we see here in the 2002 in September of 1930. September of 2002, the 30th day. This is when the Koizumi government took power, and Koizumi was a very popular prime minister. Prior to that, there was like musical chairs in Japanese prime ministers. There's one prime minister, I remember his name was Obuchi. I liked him, and he died actually on the job from overwork, which in Japanese is known as karoshi. And so that's indicated right there of 2002. And then we saw the prices recovering from the basically 12-year downturn from 1989 onward down here through to 2002. And then we have Koizumi leaves power at a very good time. He chose when the Nikkei was topping here, and when the apartment prices or real estate prices of the Tokyo metropolitan area were recovering, and he quit just in time before what's known as here, it says here the subprime shock, but in Japanese language it's called, many people refer to this sort of time frame here, what was it, 2008, at the beginning of 2009, or 2009, it's known as the Lehman shock, or the Lehman shock, it's also called. But here it's also known by many people in the investment and the real estate industry as the subprime shock, as you said, you see right here. And it's indicated from the 2007, the 8th month. And as you know that actually lasted until the beginning months of 2009. And we'll move here. This is when the here 2009 August 30th. You see the Minshuto. It says right here, right there. That's the Minshuto. That's when they took power. And the Minshuto, you should say, this is was the first, very important because this is the first time since Japan has basically been a one-party state since the end of the Second World War, where the Jiminto were in power. And this is here was very important because it's the only time that the Jiminto were actually out of power. Okay, because they're back in power again. And so they were in basically in power from this arrow here through to this arrow here. This middle arrow here, indicated here in the middle between those two, is the 2011 earthquake. And it's right there, you'll see it says right there, Higashi Nihon Taishinzai, okay, which was on ominously, or I don't know if you're a conspiracy theorist or whatever, there you go, from the 11th, 3/11 of 2/11. Okay, and then we see here, indicated there. We can see here that the Nikei is much more volatile than the apartment prices here of Japan through that time period. And there's ups and downs. We see that the pattern of the real estate is a much more stable one than we see the Nikei. Just like anywhere else, like real estate is a much slower moving market. And then here is a very important date because it marks the inception of the Abe government here, and he took power in 2012, and what's known as Abenomics. Okay, and then here this last arrow is it marks like when Donald Trump here won the election in 2016. Okay, and then here at the very, very end, we see here the Nikkei Heikin crashing from 24,000. I believe it went to as low as, well, I didn't know it went that low, but I guess it went down to probably what I guess the Nikkei is actually indicated on the other side. I think it went down as low as like 17,000 or 17,000. Yes, I was correct. 17,000 on the Nikkei. And some of the apartment or the real estate prices here, or in terms of like the used apartment prices here, have started to lower themselves as well. So I don't know. I cannot extract, like, since this time though, the Nikkei has corrected to 20,000. So, but I mean, it's a correction. It could go down again too, but like, and then you're going to obviously see that the apartment prices are going to probably revert then a little bit too. Okay. So I don't know. Well, we can extrapolate from it. I mean, you can see here from the Lehman shock that when the Nikkei crashes like it did, like it was that ever a huge major crash there in 2009. But again, the real estate prices in that period there crashed as well. Or not crashed, but they're just moving up and down. And, I mean, they're following each other, but we see that the Nikkei Heikin is a much more volatile instrument than the used mansions or the used apartments of the Tokyo Metropolitan area. Anyhow, this is, we can see here, or the chart here, a 30-year chart of the used apartments here in the Tokyo Metropolitan area from 1994, basically decreasing in price and bottoming here in 2000, bomb at the time between 1998 and 2003, and then slowly recovering from 2003 through now to 2020, and then we see this little last final shock of the corona crisis here in Japan. Well, I don't know if this has been helpful, but I just really did, every time this letter comes, I just like to look at the shape of the real estate market here in Tokyo in the period of deflation between 1990 and 2002, and then the period of inflation, or somewhat inflation, between 2004 and 2020. You could actually consider it it is an inflation period, but you also could consider it a recovery period. But yeah, it's always very interesting, and so I thought I could put that chart here on this channel here for people to look at. But yeah, again, a summary from 1994 to 2020 of used prices of the Tokyo Metropolitan area in terms of used apartments and its land values versus the Nikei. Again, another video by the Tokyo Real Estate Man, inviting people to follow this channel for real estate analysis and all kinds of things about the Tokyo or Shibuya real estate market, in particular the one I know best. Signing out here from Shibuya.